Boeing's down 5% after recording earnings. This stock was at $278 per share over the last 52 weeks. It's currently under 200. Is this a buy the dip opportunity on Boeing? What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Boeing Company. The company just reported their Q4 earnings. We'll get into that. They had revenue in the most recent quarter coming in at $14.79 billion. That was actually down 3.3% year over year, and they missed expectations by a lot, by $1.87 billion. Shares were initially up pre-market, but investors started digesting the news, and the stock ended the day, or very close to the end of the day here, down about 5%. Now, this company does have $377 billion worth of back orders. Most of this has to do with their commercial airlines, which have been on the shelf for a lot of different reasons. Number one, safety. Number two, the fact that the industry has been disrupted a little bit by, more than a little bit, by the COVID-19 virus. Company has a $120 billion market cap with $377 billion worth of backlog business. I'll let you decide if that's a pretty good deal. We'll take a look at the financials on this one. And we got to look at this technically as well. This is really setting up very interesting. I think we're on very, very close to a tipping point, so to speak, and literally, figuratively from a technical perspective with Boeing. So I think you want to hang around for this one because depending on which way this one goes, I think you've got some either nice momentum in this one or potentially further downside with Boeing. So we talked about the press release. The company's revenues definitely disappointed. And on the earnings side, which I'll show you here, definitely disappointed as well. We've got our 3 months ended here on the right-hand column, this bolded 2021. It's our most recent quarter. We have that $14.9 or $14.8 billion worth of revenue. We have total cost of just the products. Okay. In terms of products, we had $12.1 billion in sales. That cost us $14.78. So we have negative gross margins over at Boeing. That is a gigantic red flag. And certainly some of it can be explained away with the health situation, with the safety issues of their planes, but the bottom line is you have negative gross margins, not negative net margins, negative gross margins over at Boeing. Because take a look at this, off of $14.8 billion worth of revenue, you had total cost of expenses coming in at $17.3 billion. So before you pay any of your employees, before you pay any other cost, you're already in the hole $2.5 billion off of $14.8 billion. Now, the good news, if there is some good news in having negative gross margins, is it's better than where we were last year. Last year, we had a little bit higher revenue, about $15.3 billion versus this $14.8, but we had higher costs and expenses. That gave us negative operating margins at $5.7 billion. You see, for the last 12 months, doesn't necessarily hold true. They must have had one nice quarter over at Boeing over the last 12 months because they did manage to squeak out positive gross margins over at Boeing during the last 12 months off $62.3 billion worth of revenue. You had about $3 billion worth of gross profits. Now, you do have some general administrative expenses. You have research and development and some other fees, but they did actually a nice job controlling this, okay? General administrative fees actually went down by half over the last year on this quarterly basis. Over the full year, not down quite that much, but it is down a little bit. Research and development also down, not necessarily that good of a thing when you're talking about a company that constantly has to innovate, but when you have negative gross margins, controlling these operating expenses down here, definitely a good thing. That gives us loss from operations over at Boeing. So we had this $14.8 billion worth of revenue. We had to pay the cost of that revenue, which actually exceeds it, which is absolutely terrible. And that's a red flag, just a gigantic, multiple red flags waving in the air. We have to pay our other general administrative, research and development fees. That gets us down to a negative $4.1 billion. Now, again, that's absolutely terrible, but when you compare it to last year, you're at $8 billion negative. So at least you cut that in half, and maybe Boeing is moving in the right direction. You see, for the full year in 2020, obviously a disaster year, basically a worst case scenario year for Boeing. They already had the safety issues with their airplanes, and then all of a sudden commercial airplanes and business travel, that business fell off a cliff, obviously in 2020, and it's still kind of working its way back. We've seen kind of peaks and valleys in terms of airline travel, and it's certainly gotten a lot better than it has been, but we're still seeing some disruption there. You lost $12.8 billion that year. This year, you lost $2.9 billion from operations. You pull down to net income, it doesn't paint any better story. You lost $4.2 billion this year. On the quarterly basis, you lost about the same, about $4.2 billion. But again, it is an improvement. If you want to be a half glass full kind of person, it is an improvement over last year where you lost 8.5 on the quarterly basis and about $12 billion on that yearly basis. Ooh, that is a brutal statement of operations. It's gotten better, but it's still really, really bad over at Boeing. And so you can see why this stock is still well off the highs, okay? The stock was well up over $300, even up over $400 per share. And while the stock has been south of 100, it's still not technically broken up above a range that we've been in. And so we'll talk about that. Technically, interesting stuff going on at Boeing. Let's finish off our fundamental analysis. We'll take a look at the balance sheet. Everything looks okay. They have some cash on the balance sheet, less than where they were in the previous year. They have some inventory stacking up. That's not that bad. It's not that good. We'll see if they're able to wind through that. Long-term debt, it looks like they paid that off just a little bit. You went from $61 billion down to this $56.8 billion, and you have about the same amount of short-term debt, just down just fractionally there as well. I do want to look at cash flows. When you have negative net income, negative gross margins, we still want to analyze cash flows. Maybe there's some cost in there. Maybe there's some depreciation. Maybe there's stock-based compensation. Maybe there's write-offs that are really impacting these numbers. But when we take a look at it, it's not that great, okay? Off of $4.2 billion negative net income, we had negative cash flows for the full year coming in at negative $3.4 billion. Now, compared to last year at this time, you were negative $18.4 billion. So it is moving in the right direction. And I tell you what, if Boeing can see this type of improvement year over year next year, well, the stock is probably undervalued, because we talked about how this is only, and I say only, $120 billion company. And I just showed you for the full year, this company did $62 billion worth of revenue. So you're paying what, like 2 times, even less than 2 times sales for something like this? Now, I understand they don't have earnings, so you're paying basically infinity times for the earnings. But if we can turn that around, if things can start turning to a positive, well, you are getting this at a massive discount. Now, the company did do some new borrowings of 9.8, but they did do a debt repayment of about 15.3. That's where some of the cash kind of flowed out of the business. Last year, they had about 9.5. This year, about 7.8 on that cash side. Last thing I want to show you is what is contributing to these losses over at Boeing. So we've got the commercial airlines, and that's where it's at, okay? Because take a look at this. On the commercial side, we did $19.5 billion worth of revenue. These are your planes that you and I fly in when we fly commercial. Well, last year you had $16.1 billion worth of revenue. But take a look at this. Commercial airplanes, this is our earnings down here. We lost $6.5 billion. So that's a huge improvement over the previous year. Off of $16 billion worth of revenue, we lost $13.8 billion. I don't know how you do that, but they did. Now this year, you had revenues coming in at $19.5 billion, and your losses from operations are still heavy at $6.5 billion. And they overtake the other earnings. Obviously, when you have negative gross margins and net margins over at Boeing, your defense and security business basically flat year over year. You went from $1.5 billion, this is earnings, up to, again, about $1.5. And global services, they had a monster year on that. They made $2 billion. You see for the quarter, still was a really good quarter, $400 million net gain on those earnings. You lost money on that defense, space, and security. And again, you're losing money on that commercial business as well. So for Boeing to turn things around, you need the commercial airplane business. And I'm not telling anybody watching this anything new. You need for that business to turn around. Now, from a technical perspective, we are in, so I've got a couple lines. I'm going to change some of the colors here. I'm going to change this one to maybe like purple or something. So we got this purple line down here. That is a long-term trend. We made some lows here. We made a high higher set of lows. We had a nice rally, big rally, probably overextended ourselves, but we still are making a higher set of lows. So this purple line is showing you this stock is actually in a longer term uptrend. Now I've got this other green line in here. I'll change this line to maybe like an orange. So this orange line here though is telling you the opposite. In the intermediate term, you're making lower sets of highs. So you've got a series of highs here, lower set of highs, lower set of highs, and somewhat of a lower set of highs. What you are seeing is the stock starting to compress around this middle green line right here at about $195 per share. That's what's telling me that Boeing is probably going to break one way or another. And I know you don't tune into the investor channel for me to tell you, oh, stocks are going to either go up or they're going to go down. You could tune into Sesame Street for that type of analysis. But on the upside, we need to see Boeing break above these highs right here at about $240 per share. What you need is a big green candle like this to get above this cluster of highs at about $230, $240 per share. That's what you're looking for in the short to intermediate term. You're looking for this level at 195 to hold. That will confirm that our uptrend is still intact. Technically, we'll take out the highs that we made back just a month or two ago, and that will show you that this shorter term downtrend is actually broken. Incredibly bullish sign if Boeing can get above 230, maybe even more specifically 240, because what's above 240 is not a whole lot. I mean, we're talking no turbulence, clear skies ahead. Your first stop is probably back to 280. If you can blow back through 280, oh my goodness, you're back to 300. So you could go from 240, 250 up to 300 probably pretty quick on this one. Now, the opposite could be true is if we drop below this level at $193 per share, we put down a red candle down here that will tell me that this area of support right here that's acting as a really strong area of support. Okay, it was resistance here, support essentially all along here. If this level gets broken, we put a red candle below it. Well, guess what? Now you've broken that level of support and you've broken the shorter term uptrend. That would be kind of a double whammy from a technical perspective. I would expect us to come back down into the south of 150 range, start testing these areas back here. You get Boeing down here, okay? Your valuation's getting even lower than 2 times sales. And if somehow, if we can just pray this virus goes away and at the same time, Boeing can figure out their safety issues and get these planes flying and get them in the hands of their customers and their clients, well, that could be a smoking hot deal, and you could get what probably could be deemed a value stock over at Boeing, but down 5% today, well off the 52-week highs. That does leave some upside if we can break this technical trend, get above about 240, and it'll be smooth sailing ahead for Boeing. Hopefully, guys, enjoyed this video. We'll be back again soon with more. Good luck with your investments.